Hi, everyone. My name is Andrew Cove, and I'm here to tell you guys about what, in my view, is a compelling investing opportunity. So I represent Serabi Gold, a relatively unknown junior gold producer that's been operating in Brazil, in the state of Pará, which you can see on the map over there is in the north central, where our asset is essentially roughly 70 kilometers away from Tocantinzinho, owned by G Mining Ventures. But we've essentially been operating in this region for over 20 years now. And the asset that we've been operating with for over 20 years is our flagship asset, which is the Palito complex. And I like to refer to this as a steady Eddie asset producer, where essentially over the last 10 years, this asset has been consistently producing between 30 to 40,000 ounces of gold per annum. So a little bit more details on Palito. It's essentially a high-grade, narrow vein, underground, hard rock gold mine, where we are essentially chasing a series of veins. And so to further demonstrate why this asset's a steady Eddie asset producer, over the last 20 years, we've had a strong, consistent history of replenishing our resources. So just to illustrate this, back in 2005, we had a resource estimate that delineated about 430,000 ounces, and just late in 2023, we put out an updated resource estimate that delineated about 530,000 ounces. So this asset just keeps going, and we are only, and we're in the early stages of realizing exactly what we have at hand. So our story is getting a whole lot more interesting now because our development project, Coringa, is essentially coming to market now. So we now have an effective go-to market strategy, which is highly de-risked, where essentially at the beginning of the year, we received the requisite permits for us to actually execute on the development of this. So what Coringa is going to do for our story is increase the production from the 38,000 ounces where it was in 2024 to the tune of 60,000 ounces by 2026. All of this has been financed out of cash flow. And so our go-to market strategy here is for us to essentially install an ore sorter and a crusher over at Coringa, and to basically pre-concentrate that ore and then truck it over to Palito, which is roughly 200 kilometers away by road, for processing. So all of that has essentially been set in motion. With respect to the exploration opportunities, you guys need to believe me when I say we truly have an underexplored land package. So this company has historically flown underneath the radar and has historically never had access to the equity capital markets. And therefore, every single dollar of free cash flow that has been generated by the company has gone to financing the acquisitions and also paying off the historical debt. But however, the company has hit a pivotal time in its story because we finished off 2024 with a cash balance of about $22 million. And therefore, this is the first time ever in the company's history where we actually have the funds to actually go out and do a quote-unquote aggressive brownfield drill program for us to essentially make this into a bigger project and be able to tell the market about it. Okay, so this slide over here essentially explains our 3-year strategy, and which I'd like to basically break down into 3 different phases. So you have phase 1, which is essentially the focusing of the ramping up of our production from the 38,000 ounces in 2024 to 60,000 ounces by 2026. All of that has already been set in motion. The crusher, the ore sorter, that's already been ordered, that's already been installed. We commissioned that in December of 2024. And it's all a matter of us just basically focusing on the development of Coringa and trucking that ore to Palito to finally hit that 60,000 ounces by 2026. Now, 60,000 ounces is the magic number because it's in my CEO's view where essentially it's that production level where we are essentially maxing out our infrastructure that we currently have at Palito. And so in the meantime, while we ramp up our production to 60,000 ounces, we are finally going to embark on our aggressive brownfield drill program where we essentially have budgeted $9 million this year and potentially $9 million again in 2026 for us to actually finally amass a consolidated resource of about 1.5 to 2 million ounces, which isn't too far from where we are today with a consolidated resource of 1 million ounces. So just to illustrate this to you guys, back in 2005, when we initially put this asset into production, we were essentially chasing 3 veins at Palito. However, where we are today, we now have over 50. And so this company has historically So this company knows that the mineralization is there. We've just historically never gone out to drill this and formally put this into a technical report. So hopefully by the end of 2026 or mid-2027, when we actually amass that 1.5 to 2 million ounces of resources, that is effectively at the time when we put pen to paper to basically put together a PEA which would basically demonstrate a production profile on an annual basis of about 100,000 ounces per annum. So that is going to be the focus of phase 2. And with respect to our deal, with respect to our news flow in 2025, 2026, it's predominantly going to be with respect to the drill results and the exploration program we have planned. And then the last part is phase 3, which is how are we going to accomplish the production of 100,000 ounces per annum with respect to our production capacity. So we currently have a 600 ton per day production facility over at Palito. However, when we acquired Coringa from Anfield back in 2018, it essentially effectively came with the key tenets of a processing facility. So we currently have 2 ball mills sitting dormant, which sum up to 750 tons per day, which could easily be used to basically augment our production over at Palito, which based on today's dollar amount or dollar terms is roughly about $3 million. But however, we're going to decide where the additional production capacity comes depending on the success that we have with the drill bit. So if at the end of 2026, 2027, we have more resources at Palito or more resources at Coringa, whatever the economics dictate for us to be able to make the most sense for the company to go forward is the one that we're going to take. So that could be expanding production capacity at Palito or actually building a standalone plant over at Coringa. But we won't know until we actually cross that bridge. And since we only have 2 minutes left, so lastly, with respect to the corporate overview, the reason why we are relatively unknown is because we are UK headquartered and we are listed on the AIM, but we're actually dual listed on the TSX as well. So historically, the company has never had boots on the ground here in Toronto or in Canada. They've effectively picked me up this year to join them and to basically help them get the story out there. But taking a look at the share price graph at the bottom right, we've basically had a pretty good re-rate with our story. At the beginning of the year, we essentially got our permit, and throughout the rest of the year, we've basically executed on everything we've telegraphed to the market, and as a result, the market has been catching on. But you take a look at our company size, roughly about $120 million in US market cap. We have a cash balance. We finished 2024 with $22 million US in the bank account. We have about $5 million of debt with a local Brazilian bank. That's for working capital purposes. And if you just take a look, the last key takeaway here is with respect to our AISC of 1790. We expect that to come down materially over the next 2 years as we ramp up production to 60,000 ounces per annum. Reason being is because about 75% of our costs are all fixed. And therefore, as a result of that, we do have a strong reverse torque to the level of production. And so as our production ramps up to 60,000 ounces in the next 2 years, we expect our AISC to essentially fall to within the $1,400 range. So hopefully we're able to execute on that. And then taking a look at our shareholder register, we do have a good number of institutions who are current shareholders. We have Fratelli, which is a family office based out of Santiago. And then we also have Greenstone, which is a natural resources private equity fund based out of the UK. They own 50% together. They're both supportive of our story. I think you take a look at the rest of the names. You've got River and Mercantile, Premier Miton, Gold 2000. These are well-respected institutions out of the UK and Switzerland. So definitely a story that has strong support that is relatively unknown. And so therefore, hopefully this is enough to interest you all. And if you have any questions you'd like to ask, my contact is at the back of the presentation. Feel free to reach out to me. I'm based in Toronto. Happy to meet with any one of you. Thank you.